You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome to the Infinite Banking Mastery Podcast. I don't know if you can tell, but I do have a slight cold, so bear with me, please, through this episode. I wanted to talk today about CDs versus whole life for the infinite banking concept. I know that CDs are paying better interest these days, and so they might be more attractive because, as I mentioned in my last episode or the last two, that you really could do infinite banking anywhere. You could do infinite banking under a mattress. You could do infinite banking at a CD at someone else's bank or using a CD at someone else's bank, just like Nelson Nash did illustrate on page 45 of his book, Becoming Your Own Banker. So let's see, what are the differences? Why wouldn't you want to use a CD at someone else's bank instead of a whole life policy? Well, for one thing, when you have a CD at a bank and you are building up your money there to build a banking system and basically buying a new CD every year, let's say, well, you're not an owner of that CD, so you're not going to be receiving any dividends. Not like with a whole life policy with a mutual company, you will be receiving those dividends too. So that's going to help fuel the growth of your contract, the growth of your cash value, your death benefit. Those dividends are going to help fuel that growth. And once those dividends are earned, they are going to be within your cash value and then also able to earn the guaranteed rate on the contract for the rest of your life. So those dividends are a big deal. Also, right now, yes, rates are up. They've been going up, but they also are still taxable. So that brings it down a little bit. But also, how high will they be? Will they always be up? If you were to start a banking system using CDs and with the intention, they're doing really well, I'll be able to buy CDs at this rate for a while, and then I'll just have this great return in my CDs, and I'll be able to finance my purchases by withdrawing money from here and paying myself back and then buying new CDs. But then how high will those rates be, or how long will they be at the rate that they are? They change all the time. You're not going to have rates that are always around 4+%. Of course, some of those rates, it depends on how long you hold the CD. How long you're going to hold it in order to receive those higher rates. And so when you are using your CDs or accessing your CDs too, like on page 45, where Nelson was telling the story of the two sisters, one sister who decided to use a CD at someone else's bank, and one sister who decided to purchase a whole life policy and use that instead. So these two sisters are doing these two different actions, and he's trying to compare them to show you what's going to happen in the long run. And this is something that I certainly would love to go over with you. If you have read this book and you would like my help, you would like to work with me, I'd be happy to go over this illustration and clarify every single thing inside of it for you. But if you have the book and you want to open to page 45 or reference that, then you can see how he's describing how both sisters are both going to fund their respective systems with the same amount. They're both going to begin starting to purchase a car every 4 years, 11 different times. They're both going to begin that process at the same time. And they're in that process too, it has a really small number for the amount that they're going to take from their system to put into the new car. Well, it's because it also has a trade-in. They have a trade-in vehicle. It's not trying to illustrate that the car is quite that inexpensive, but he did write the book a while ago too, so cars just cost less. But they're both going to be doing the same thing, funding the same amount, and then purchasing a car at the same time, and then replenishing their systems with a loan repayment. A car payment, basically a car payment for their car. And they're going to be doing the same thing, paying the same amount and all of that. And so what he's showing is through that chart is how much higher, how much further along the infinite banking sister would be using a whole life policy for her process of banking, where the other CD sister has made less. And also keep in mind that in order for the CD sister to build this up, she would have had to have been saving to make sure she has the amount every year. She'd probably want to save into a separate bank account, a certain amount every single month to make sure by the end of the year, she has what it takes to purchase the CD that she wants to purchase that year that's going to equal the same amount that the whole life sister is putting into premium. So CD sister is saving up every month into a bank account, and then at the end of a year, buying a CD, going to the bank, buying a CD, and then as needed, taking money from those CDs then to get the amount needed for a car purchase, and then trading in the car, and then going in and buying the new car. And the one very significant difference between these two sisters is that the CD sister will have to be withdrawing the funds from her CDs in order to purchase the car. So she's pulling the money completely out of the system. That money's no longer earning for her. She's going out and buying the car with it. Whereas the whole life sister is able to borrow against the cash value in her policy and then go out and purchase the car borrowing against that value so that her whole value is still earning for her because she did not withdraw it. She didn't touch it. She left it there and borrowed against it. And so those two things make it a lot different. So even though, yes, rates are good right now, rates are okay for CDs, they're higher than they have been, there's still a lot more benefits to using a whole life policy than a CD, that you're able to borrow against it, that you're going to have that guaranteed rate for the rest of your life, that you're going to be able to earn dividends, which you are not able to earn when you own a CD at a bank. Those dividends that for those people who own the CDs, those dividends for that bank are going to the stockholders of the bank. And so I hope that this was helpful. I hope that this might clear that question up for you. I've heard it once or twice. And so this is maybe going to be a little bit shorter of an episode just because I am battling a cold as well. So again, as always, of course, please reach out if you have any questions you want to work with me. You would like for me to be your advisor. I would love to help you. I'd love to meet you. Please reach out to me at Valerie@alphaomegawealth.com. We can look into this strategy for you, for someone that you love, if you are uninsurable for some reason. And otherwise, I hope that you have a great week and avoid any nasty viruses. Good luck out there, and I will talk to you next time. Take care.
This is thepodcastfactory.com.